After every market correction, the S&P 500 has a chance to regroup and start rising again. But even in the sharpest comebacks, like what we've seen recently, it can't happen all at once. So today, we'll be talking about the 7 steps needed for a new long-term uptrend to form. So as we know, it's been an extremely strong comeback from the pivot low after that huge gap lower on last Monday, August 5th, to the point where the S&P is now up about 6% in 6 trading days. And we haven't seen something like that since the very beginning of the uptrend back in October and November. Specifically from October 30th to November 6th, the S&P also was up 6%. As we talked about in the past, it was testing a 50-day moving average and a downtrend line, very similar to what's been happening right now. Needless to say, that kickstarted something that has now lasted for 10 months. And so it may seem like a straight shot higher right now. At the same time, we know for this to actually have some legs, it needs to go through a number of steps to actually get there. And so we're going to talk about each one of these one by one, looking at charts that we first talked about to our premium clients at the beginning of last week and what they look like now. So let's start with holding or creating support. So what do we mean by that? As we know, when the market is pulling back, we try to identify some key support levels. And we're going to be comparing the most recent downturn to the pivot lows we saw in April and May. Not quite as severe, but it's just easy to look at both of those periods on a clean chart in this manner. And so able to either hold support as we had here or create. And so when the market's really selling off aggressively, support levels really don't matter, I'm sorry to say. And I'm the first one to admit that. So when that happens, you need to see when the market stops falling and then use that as a reference point. So we hear the term price discovery. I call this more about support discovery. And in essence, we want to get to pattern discovery, which is, of course, the ultimate goal of any comeback. And so when that occurred, again, we know the gap lower and the huge bounce from that point on August 5th into August 6th here, this is what it appeared like on the chart that we showed in our opening look piece on Wednesday pre-market on August 7th. And so once you have that ability to hold support or at least pivot after making a key low, the next step, of course, is follow through from that. And clearly that has been the case from that point, with very little dips along the way, at least over the short term. So the same thing happened after the April low, same thing happened after the May low into June. And so after you have a follow through, what comes next? Logging a higher low. Now this is extremely important because as anyone who's followed things that we've said over the number of years, this is the most integral part of potentially forming a bullish pattern, whatever that eventually develops into. And so that, of course, occurred in May and in June after the first pullback after that initial burst from the low both times. And so, as we know, we're still waiting for that to occur now. We've been talking about the possibility of a higher low really ever since the market started to rally 2, 3, 4 days into this. And this still needs to occur because without it, you still can't get a legitimate bullish pattern. And so once that is done, we get the construction of a bullish pattern. And we saw how that looked here again, April to May, June, July, how the breakouts worked as well. And we know that there are many periods before this going back to the beginning of the extension too. And so if we would just look at what it could potentially look like for the S&P 500 now, if you have a rally that stops, say, around 55.50, we can look at the period toward the end of July as appearing as a potential left shoulder of an eventual inverse head and shoulders pattern. This is how that could look, right? With next pullback producing some sort of higher low here as well. And so from that point, after you form the bullish pattern, what's the next step? Breaking out. And that's easy to see now. But remember, back then, during both of those times, we didn't have a lot of big 1% moves still, right? Very low two-way volatility. Not even worrying about what the VIX was doing, just looking at the low number of 1% moves that were happening day to day, week to week, month to month. Because when we have a high frequency of smaller moves, there's just less chance of whipsaws, meaning that clean breakouts occur. And when clean breakouts occur, you get the chance to hit an upside target, which of course that happened both times too. And so we're pretty far away from that occurring at the moment, but that is still what we need to see going forward. Now, the story doesn't end there, because at that point, you need to repeat steps 3 through 6. Now, what does that mean? Meaning form new bullish patterns. And so it may be difficult to see that much into the future to think that could occur, but let's again remember what happened since that November breakout. The first one led to another one, led to another one, led to another one. Eventually, we had 8 bullish patterns constructed along the way, 8 clean breakouts, 8 upside targets hit. And that is really what needs to occur for a long-term uptrend to form. Because if we'll recall, after this last target was hit at the beginning of July, we didn't have any short-term bullish patterns left. And that's what caused us to be a little bit cautious, basically admitting the fact that we needed some two-way volatility to occur for the next bullish pattern to actually form. So the question is it worth even waiting for this to happen when the market is so much higher now, to the point where if everything we just laid out would take place, it'd be breaking out, say, 5550 to 5600, and even not being that far from the last high. So the question is, did we miss it? Did we miss the bigger part of this move already by being overly patient? Well, if you look at just this time frame, just on a daily chart, the answer is yes. But this is why we look at the short term first. Talked about looking at the daily data from a breadth perspective, also for how the market closes all the time. But another part of it, of course, is just looking at the daily price action in a very short-term basis. So then that means we can't ignore the short-term charts. So this is what we mean. And so we talked about this on a 30-minute chart first. And again, this was after the action on August 6th, where we mentioned those same steps where on a very short-term basis, you did have a creation of support and potential of an upside follow-through. That was it. Didn't know how this would develop. It could have very easily rolled over again, but we want to track this sometimes, even on a 30-minute chart, when we're in a trading environment like we have been in, meaning that the moves are exaggerated on both sides. So even though this pattern was very short-term, we know that the moves were strong enough that if we tracked it and we saw the breakout, it could produce a pretty substantial high, at least for a swing trade. And so a few days later, started to look like this. We saw the marginal breakout. And then, of course, from that point, this is what has happened, right? This is as of about noontime on Thursday, August 15th, with the S&P 500 now extremely close to actually achieving that upside target. So if we think about it, if we just looked at all those steps from a very short-term basis and applied it to this chart, that means we're actually at number 5 already with the upside target about to be hit. And if that were the case, that means we can go to steps 3 through 6 and get back to this one as well. So if you have already a short-term pattern being acquired at this point, now we're looking for this to possibly occur on a much larger scale. And if that were obviously to play out, and that means we're going to get a breakout to new highs, so forth and so on. So this is the process we look at. It starts in the very short term, eventually morphs into something more substantial. And if all things go according to plan, then you see the type of uptrend that we just had over the last 10 months. Will that continue? Nobody knows, no matter what they tell you, but looking at the charts in this manner is going to give us a good roadmap to follow in the weeks and months to come. That's it for today. Don't forget to check out these videos and subscribe, and talk to you next time. Thank you.